Hello everyone, my name is Radovan Vojtko, I'm CEO and Head of Research at Quantpedia. So it's still summer, as you can see around me, and it's a hot summer, and this video will have a summer vibe. So we are still working even during the summer, and we have a new piece of quantitative research for you. So let's take a look on it. We will discuss the commodity trading strategy. Commodities are a pretty popular asset class. Out of around 1,000 plus something papers we have in our database and strategies we have in our database. Those that are about the commodities are approximately 150 of them are about the commodities, which is probably 10%. So it's not the most popular asset class, which is the equities, but I mean still quite a popular asset class. As I promised, the current research that we published approximately 2 weeks ago has a summer vibe and is about how the sunspots or sun activity can predict the prices or the future performance of the wheat futures and also the corn futures. Why it is so, and why sunspots? Firstly, what are the sunspots? So sunspots are the temporary phenomena on the sun's surface that appear as a dark spots due to the lower temperatures compared to the surrounding areas. I mean, the sunspots are associated with solar magnetic activity and they follow an approximately 11-year cycle.
Unlock the power of Quantpedia Pro with over 900 premium strategies extracted from 100,000 research papers and more than 30 quant reports. Model full portfolios, generate real-time reports and save hours of work. Quantpedia Pro, your edge in quantitative investing.
The sunspots seems like very distant from everyday activity of human life, but they really influence the human climate. The reason for that is because when there are a lot of sunspots on the sun, the total activity of the sun is higher. So I mean the total energy that the sun sends into the space is higher, and if of course this solar irradiance has significant impact on the weather in the earth. If there is impact on the weather in earth, there should be impact also on the prices of the wheat, because the wheat is directly, or the price of the wheat is directly based on the weather. And also the same is for the corn. When there are a lot of the days when sun is shining, there is a higher probability that we will have a more wheat in the future and the price of the wheat should be lower. The theory is natural, so the periods of high sunspot activity are often associated with the warmer and more variable weather patterns in the upper atmosphere, and this can have an effect on the Earth's climate, and the increase in the air temperature may enhance the crop yields. This increase in the crop yields may place downward pressure on the prices. This is the theory. So what we did is that we downloaded the data about the sunspots. You can download them very easily from Space Weather Prediction Center. The data are available from year 1749. So it means we have over 270 years of the data for the sunspots. As we can see, we have a lot of the data, and what we can expect is that the impact of the solar irradiance, or I mean the number of the sunspots, is probably slow. So what does it mean is it will probably not impact the prices from month-to-month basis, but I mean from year-to-year basis. So the higher temperature, more sun will probably increase the yield of the crops, but it doesn't mean that the price of the crops will go down the next month. What is probably more probable is that the price of the crops will go down in the next year or 2 years or 3 years. What does it mean is that we are not using the traditional trading strategy. We must use something like a trenching strategy. What is the trenching strategy? So let's imagine that we have a portfolio. We want to rebalance the portfolio 4 times a year, so every quarter. So we have 4 trenches, and we have a 12-month holding period. So we want to hold our trading strategy for 12 months. So in the first quarter, we rebalance 25% of our portfolio, and we hold this position for 12 months. And then in the second quarter, once again, we rebalance 25% of our portfolio and we hold the position for 12 months. In the third quarter, once again, 25% of the portfolio, we hold it for 12 months. Fourth quarter, the same. And after 1 year, we get back to the first tranche and we once again rebalance portfolio and we hold that first tranche for 12 months. By using the tranches, you can see that we can build a trading strategy that has a longer holding period and not just, 1 month or 1 week or something like that. And that's exactly what we need. So we need to build a trading strategy that has a longer holding period because it takes the longer solar irradiance or the number of sunny days or something like that to impact the prices of the corn, because the corn or wheat doesn't grow for a few days days or few weeks, but it takes a longer time. So this is how the tranching work, and let's get to the results. So we backtested using two different data samples. So we backtested the trading strategy using the futures data, and then we backtested the trading strategy using the spot prices. Of course, we have a longer history for spot prices. However, the problem with the spot prices and the commodities, themselves, is that you cannot trade spot price directly, because if you want to trade the spot price and buy something on the spot, you must have some place where the commodity can be delivered and where it can be stored. That storage costs something. So there is a cost of the storage, and the cost of the storage is not directly incorporated in the spot prices. So that's the reason why we are using the futures prices and the continually rolled wheat futures prices. If you are interested how to build a continuously rolled wheat futures data sample, I recommend you to visit our article, which we discuss how to build such continuous price series. And it consists of back adjusted daily data from November 23rd, 1979 until April 30th, 2025. So we have a data for over 45 years, and the added value of the futures is that storage price is incorporated into the price of the futures. So let's take a look. So here we have a quarterly Sunspot activity, and here we have a wheat price. So what we can see firstly is that the future price, or the continuously rolled future price of the wheat, is continuously going down. So it has a declining tendency. So the natural benchmark for the wheat is shorting the wheat. And if we short the wheat every month continuously, we will get the positive performance around 1.9%. So on the future, using the futures, the wheat price goes continuously down at approximately 2% per year. And we can short those futures, and we can get the performance out of that. However, with a higher risk, because the maximum drawdown is approximately minus 72%. And with the high standard ratio, so Sharpe ratio and Kalman ratio is really low. So what was our idea is that let's build the hypothesis that if there is a high solar activity, we can expect that the prices will go down. So we can select the threshold. So for example, like 50 sunspots on the sun over the quarter, and if there is a higher number of the sunspots, we know that the sun has high activity, so we can expect better weather over the next 1, 2 or 3 years, and we can expect higher yields. So in this case, we should short our crops, so especially the wheat and the corn. In case there is lower solar activity, so there is not so many sunspots, we should hold, zero position, so we should not have any short position. The question is if we can improve that basic short-only strategy. The answer is yes, of course, significantly. So the best threshold is the 50 sunspots. So if there is more than 50 sunspots on the sun, it means that there is a high activity in the sun, so we can expect the higher temperature in the next 1 or 2 or 3 years, and we can expect the price of the wheat will go down more significantly than in the other periods. So in this case, we can short the price of the wheat, we can have the performance which is over 5% with the lower maximum drawdown, lower standard deviation, higher Sharpe ratio, higher Kalman ratio, which is really great. The question is, what is the optimal holding period? So we can short and hold our position over 1 year, so 4 tranches, over 2 years, so 8 tranches, or over 3 years, so 12 tranches. It seems that 1 year is probably the best holding period, so it makes sense to hold only for 1 year. We have the strongest performance. So the light green curve is the performance of the strategy that shorts when there is a high sunspot activity. On a quarterly basis, rebalance the portfolio. We have 4 tranches and holding period is for 12 months. Okay, so this is how does it look when we go short. Now there is another hypothesis, we can go long. So we can apply the same procedure, and we can expect that when there is a low activity in the sun, there will be low temperature and there will be lower yield, so the price of the wheat or corn can go up. So what happens is that in this case, if you try to buy long, we will not have negative performance. So let's remember that on average it makes sense to short the corn and wheat prices. So in this case, when the number of the sunspots is very low, we do not have extremely negative performance, we have only small negative performance. So it is not a bad idea, but we will not make any money out of that, because the higher solar activity is the stronger signal for the short, but the low solar activity is not very strong signal for the long. So the long leg is not very useful. The solar activity only predicts the short leg, so we can do only the short, and it doesn't make sense to build a long only strategy or use the solar activity for trading the wheat and futures on the long leg. Okay, let's take a look on the spot prices. So we have also the spot prices. We can obtain the spot data from 1842, so for over 150 or 170 years. We use the multiple different data sets to build one data set for the continuous spot price of the wheat, and we try to apply the same strategy. We try to apply it for the long and also for short only strategies. What was the result? Yeah, of course, there was some positive performance when we try to short or try to use the signal from the sunspot activity to to short the wheat on the spot. However, it was not strong performing as trying to short the futures. The reason for that is because the futures, the cost of the storage is incorporated, and as I said before, using the spot prices to trade the commodities is very impractical, so it's not very possible. So what does it also mean is that when we try to analyze a trading strategy using only the spot prices, we can get some idea how it performs, but we cannot use it in real life. So in real life, it's better to use the futures. In futures, it's highly profitable. When we use the spot prices, is profitable, but just a little. We have just over around 1.5% performance. So when you short the futures, we have over 5% performance. So when shorting, then it's significantly better to use the futures. What is the conclusion? So in the conclusion, the use of the wheat futures is not only more profitable, but also more rational. It inherently accounts for the storage costs, and it also causes the significant downward price drift, and we just need to correctly time the entries and exits. So our goal was to use the natural phenomenon as sun activity, so to enter the short positions when the number of sunspots exceeded the given threshold, and our trading strategy using the 4 tranches with the 12-month holding period when the threshold is set to 50 is really profitable, and the reason is generally due to declining behavior of the futures prices. It works not only for wheat but also for other crops as well, also for the corn. It really makes sense when you are trading the commodity futures, take a look on the solar activity, because there are some commodities that are predictable when you use the solar activity as a predictor. It's especially corn and wheat, and you can use it very easily to build a trading strategy. I hope that you like this summer analysis, and I hope that you will join me in the next video, and enjoy your summer. And thank you very much.
Are you interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.